Okay, let's make a start with cash flow. If this comes up, cash flow tends to be all or nothing. Most of exams, there is no mention of cash flow at all, 0 marks. But if cash flow is there, it's a 35-mark compulsory number crunching question. So it's very dangerous to go into the exam without being familiar with cash flow, because group cash flows are totally and utterly different in their approach to the preparation than either the P&L or the balance sheet. The P&L and the balance sheet are very, very similar. You eliminate intercompany items, whether that's intercompany current accounts or trading. You have an impairment loss, whether it's in the P&L or the balance sheet. You know, you're dealing with fair value adjustments on the balance sheet, you're dealing with depreciation on the fair value adjustment in the P&L. They're very similar. You've got exchange differences, you understand. But cash flows are different. And on one level, one of the reasons they're different is because you are not given a cash flow to prepare a cash flow from. You're given 2 balance sheets and a profit and loss account. So the format of the cash flow is something which drives your answer and is something that you must be familiar with. And the format is not given in the question. Now, your opening gambit, your opening heading, will be operating activities. But because we use the indirect method, you start with your profit before tax, and then you add back your non-cash expenses. Finance costs, depreciation, impairment losses, amortization, non-cash expenses, pension costs, foreign exchange differences, share-based payments, any non-cash expenses are added back. You would deduct your income, you would deduct your non-cash income, your income from associate. You would adjust for your changes in working capital, and you then, at this stage, have been involved in a reconciliation. Because when you start a cash flow, you're not doing cash. When you start a cash flow, you're reconciling. When you start a cash flow, it's about the profit and adjusting the profit. In your operating activities, there are 3 cash flows. Interest paid out, brackets. Interest paid out, brackets. Taxation paid out, brackets. Pension contributions paid out, brackets. The examiner has no tolerance if you put a payment as a receipt or a receipt as a payment. To get the mark, if it's paid it must be in brackets because it's out. If it's a receipt and it's in, it must be a positive number. So this part is a reconciliation, and now we are into in or out, receipt or payment, black or white. What's the second heading? So operating activities is the first heading. What's the second heading? Yeah, investing activities. So investing activities in my world is everything to do with non-current assets. Everything to do with non-current assets. So this is where you buy, money goes out. This is where you sell, money comes in. This is where you have a return, money comes in. So investing activities You buy plant, you buy investments, you buy subsidiaries, you buy intangible assets, you buy fair value through OCI investments, you buy, non-current assets, out. Disposal proceeds comes in, and if you have a dividend received or rental income on your investment property, that is a return, so that is a receipt, so that is a positive number. Financing. Financing activities are down to two things: debt and equity. Debt and equity. How do you finance a business? Through debt or equity. If it is debt, you either borrow or you repay. New loans bring cash in. A repayment of loans means cash out. Finance leases, the money you pay back is a repayment of a loan. If it is equity, you either have the proceeds from the issue of equity. What do we call it when we pay our shareholders money? Dividends, yeah. So, dividends paid. I suppose we also transact with our NCI when we do a control-to-control transaction. So we could sell them a slice, or we could pay them off. So either way, if we increase the NCI, we receive money, cash in. If we are reducing the NCI, paying them money to go away, then money goes out. So a payment to the NCI is part of equity. And then you would reconcile this to your cash and cash equivalents. You would reconcile this to your cash and cash equivalents. Your cash and cash equivalents include your short-term investments that are readily disposable into known amounts of cash, less than 3 months, where there is no risk of the change in value, so they cannot be shares. So cash equivalents are including your current asset investments. Yeah, readily convertible into known amounts of cash. Guidance is less than 3 months, where there is no risk of changes in the value. In other words, if you own some shares, the shares are not cash equivalents. Cash equivalents have to be money on deposit, or cash equivalents have to be bonds, liquid bonds, yeah, that you can get your hands on. So the format, to my mind, drives the question. And I hope it's revision, I hope it's patronising to go over the format of the cash flow for 5-10 minutes or so. If you come across a cash flow that you are not sure where it goes, I think you only have 2 basic questions to ask. First question, which way is the money going? If the cash is coming in, it's a positive number. If the cash is going out, it's a negative number. So that ought to be fairly clear from the context. If it's a cash flow, it can only appear in one of 3 places. Day-to-day operating activities. Anything to do with non-current assets, investing. Anything to do with debt or equity, financing. There is normally a fair amount of easy marks available in a cash flow question, but inevitably there will be 1 or 2 there'll be 1 or 2 really crazy marks. They are not the difference between pass or failing, And you need to make some snappy decisions if he throws something at you which is left field. It's either in or out, it's either operating, investing or financing. Yeah, but I've given you the structure of the cash flow. Yeah, you can rote learn it, you can understand it, but you've got to know the format of the cash flow, because it's the format that drives the question. If we get another cash flow occurring in the June exam, then it ain't coming up in September. No, if we get a question, yeah, I mean, it's interesting that, isn't it? Because the June exam, done and dusted. The September exam, done and dusted. The December exam, done and dusted. And March, the March exam, pretty much finished as well. So, actually, June, September, December and March, there are 4 exams written, finalised, signed off, ready to go. The ACCA plans ahead. One of those 4 will contain a cash flow. I'm pretty certain. One of those 4 exams will contain a cash flow. I just don't know which one. Yeah? But as soon as it happens, it probably won't happen again next. I don't think there'll be 2 cash flows in those 4, is what I'm trying to say. So you could look upon, if you wanted to, hey, there's a 1 in 4 chance of cash flow coming up. But whatever, I have to assume this afternoon that cash flows are going to be there. Yeah? Otherwise it's kind of become a pointless exercise. Skim read the question. We open up 4 pages. Operating, investing, financing, workings. We then start looking for easy marks. We start at the beginning of the cash flow, we look for profit before tax. We add back the finance cost. We adjust for the investment income. We look for depreciation. We start to go through looking for our non-cash items. When we dry up, we leave a space, we do our working capital. Then we start looking at interest paid, taxation paid, pension contribution. As soon as we come across anything tricky, we glide. We glide. Ideally, I'd like to finish the question in half an hour, 40 minutes. I'd like to get to the end of the question in 40 minutes, half an hour, 40 minutes. Because what we can then do is go back. Now that we've gone through the question several times, we can go back and say, oh, let's work out this difficult number. PPE is difficult, tax is difficult, because it might involve a lot of information that's scattered throughout the question. Exam technique is about picking low-hanging fruit first. Yeah? You pick your low-hanging fruit first. You do the more difficult stuff at the end of the question. Yeah? So, the question we're going to have a look at together is a past examination question, as you would expect. This is page 67. This is a question called War Burt. And interestingly enough, not only is it on page 67, but it's on page 68. Not only is it on page 68, but it's on page 69. Not only is it on page 69, but it's on page 70. Welcome to P2 Cash Flow. Now on page 71, you can see some of the feedback. These quotes in the notes are from the examiner's reports, and you can see there the marking guide. So one of the things we might be able to do is to mark our answer. But it is important that we show our workings, that we label them, we articulate them. But at the same time, we don't want to show workings unnecessarily. We don't want to be slowed down and bogged down. I'm going to give you 5 minutes. I'm very, very happy to steer you through this question. But I'm going to give you 5 minutes, first of all, because it's respectful to skim read the question. There are paragraphs of information, there's stuff out there, and you've got to be vaguely familiar with where it is. Not get sucked into the detail, but where the information is to be found. So, 5 minutes please.